Welcome to this introduction to trading cryptocurrencies. We'll look at different approaches and define the distinction between investment and speculation. Because there are so many factors, known and as yet unknown, that will dictate the final outcome, all investments involve an element of speculation. An investor is committing money with no guarantee a profit will be the end result. But we can still make a distinction, even if it is not an absolute one, between cryptocurrency investors and speculators. An investor will carefully research particular cryptocurrencies and the wider market. Why do I believe this cryptocurrency has a better chance of rising significantly in value than the other options? What factors will boost its price, and what are the risks? Is the ratio between the potential downside and upside a strong one? At what point will I lock in profits or cut my losses? And how does this investment fit into my overall investment portfolio and strategy? In summary, there is considered analysis of the investment opportunity and risk. Cryptocurrency speculators, on the other hand, can be considered those who have bought cryptocurrencies on a fear of missing out principle. They have not put the time and effort into understanding the technology and qualities of different cryptocurrencies and which factors will dictate their future success or otherwise. A speculator has heard the media buzz and probably friends talking and decided to make an investment in cryptocurrencies just in case. Not doing so means they might lose out. Additionally, speculators are usually oriented on short-term profits rather than long-term holdings, and they look to extract quick gains based on latest market developments or momentum. Of course, taking an investor approach to cryptocurrency trading greatly increases your chances of success and making a profit. So do your research, decide upon a cryptocurrency's trading strategy and how it fits into your wider investment strategy and personal finances.